Introducing SOLA ADESAKIN Investment Coach. SOLA ADESAKIN is a multi-dimensional author, speaker, and finance expert, experienced and versatile chartered accountant with about 18 years hands-on experience on personal and SMEs finance. She is a personal finance coach, trainer, and conference or seminar speaker. Through her blog and the Smart Stewards Academy, she has helped many men and women bounce back from stress to rest and from debt to wealth. She holds a BSc in Applied Accounting from Oxford Brookes University, United Kingdom. She is a fellow of the Institute of Chartered Accountants. Ladies and gentlemen, let's make welcome SOLA ADESAKIN.
Awesome. Good evening, everyone. I am excited to be here. Thank you for the
Good
welcome.
evening, ma. You're welcome, ma.
Thank you for the warm welcome.
It's good to have you, ma. It's good to
glad
have
to
you.
be
We're
here.
expectant. And okay, ma. The floor is yours, ma.
Awesome. Thank you again to the organizers of this event. Like I said already, I am glad to be here, and I hope that in the next few minutes, I would be able to interact with you and throw some light your way along the topic area that has been given to me. So I have slides, and I do hope that it will be displayed. Is somebody going to display my slides for me? Okay, awesome. So please display my slides if you can. It would be my pleasure to share my slides with everybody who has tuned in. I am here basically to talk about the topic real estate acquisition for professionals. So I need to confirm if I can share my screen from my end. Please let me know if I can share my screen so that we can get things going from here. Or if you're going to share that from your end, please let me know so that I can just, take care of things really quickly. Okay, so I've been told to share on the topic real estate acquisition for professionals, the do's, the don'ts, and the strategies. Now, real estate is something I have been interested in for a long time. And of course, in recent years, being an investment coach myself, I have, gone into real estate as part of asset classes that we have invested in over the last few years. In addition to that, I have worked, with clients that have invested heavily in real estate, and I've seen them practically benefit, from the rewards. Of course, the risks are there, but I have seen, on a close level basis, the benefits, the dividends of real estate. So, I think I'm more than qualified, to share some of the things I'll be sharing with you. And one of the things I would first of all like for you to know is that please do not think real estate is something that is reserved for those who are really wealthy or for those who are rich real estate is an asset class that can be embraced by everybody, an asset class that everybody, as long as you start to earn money, even if you are still in school, knowledge is key. You can start to learn the dynamics, learn the basics, allow the light of the knowledge, impact your soul so that it can, prepare you for the years ahead. Okay, so I am still waiting for my slides. Please just go on already. I need no further introduction. I believe through the flyers and a bit of the profile that I've been read. Please go on in my next slide. I have been introduced. I am SOLA ADESAKIN again. I'm an investment coach and the founder of Smart Stewards, a financial literacy platform through which we seek to, help people achieve their financial goals. I am also an investment coach within my investment club. In the last, pretty much 2 years, we have done close to $3 million in different asset classes. Okay, I'm an author of about 8 books. My books are available on Amazon and just everywhere. So today I want to talk about one of the asset classes that we are practically invested in, asset classes that I have seen wealthy people, high net worth individuals, those you call HNIs, invest in. And I hope to share some practical examples that would encourage and motivate you and I, to embrace real estate, to embrace the dynamics, to seek the knowledge, and to do more. So I'm talking about the do's, the don'ts, and the strategies. Next slide, please. Now, let's quickly talk about real estate. I believe that the speaker who went ahead of me already demystified the word real estate and probably just explained. Mr. Clement, that was a good job, explain the dynamics and all of that. But I am just going to zoom in a little bit into, real estate, even though I would be talking from an investment point of view. My topic is real estate, acquiring real estate for professionals. So I'm just going to teach the basics of real estate vis-a-vis and in addition to other asset classes. And today, briefly, we'll talk about 8 things, basic things you need to know about real estate, the do's, the don'ts, and the strategies. Next slide, please. So what is real estate? I was reading about real estate, and I stumbled on some interesting facts. And I'm like, that word has become so generic that if you do not take a step backward sometimes to understand and to appreciate and embrace the real meaning, you get lost in the way people call real estate. And we need to sometimes unbundle words to get to the root, to literally understand what it means. But right before I talk about real estate, as an investor, when we talk about investment, literally investment is you putting in your money into something with an expectation that in the nearest future you will earn returns and your capital will come back to you. In the world of investments, on investing, there are about 4 or 5 asset classes, and real estate is just one of them. So as an investment coach, I just wanted you to know that real estate is just one type of asset class. You have equity stocks, you have fixed income securities, you have cash and cash equivalents, you have real estate, you have derivatives. So, even though we are talking about real estate today, I just wanted you to know that there are other asset classes. So if you're thinking, oh, real estate, the way they say real estate, everybody is in real estate and they are calling billions, they are calling dollars and millions. And you're kind of confused. You are seeing doubles when you see figures. I just thought to let you know that, real estate is just one aspect of investing, and you might, at your level, depending on your financial capability, embrace some of the other asset classes as well. Okay, so real estate is one asset class. Now let's talk about what real estate is exactly. So real estate, according to Investopedia, okay, I think I need to read from my slide as well. Please go on to the next slide. Let me quickly read this to you. Real estate is the land along with any permanent improvements attached to the land, whether natural or man-made, including water, trees, minerals, buildings, homes, fences, and bridges. Real estate is a form of real property. So 2 words, real, genuine property. It differs from personal property, which are things not permanently attached to the land, such as vehicles, books, jewelry, furniture, and other form of equipment, according to Investopedia. And I think that kind of, explains the dynamics and the basics of real estate. So anything that has to do with land or anything that is attached to land is real estate. Okay, so when you're thinking about it, some people would say, oh, I'm a real estate dealer. Yes, I get it. I'm going to still come into the categories of players in the real estate. But you see, you talk to some people and they're like, yeah, I'm in the real estate. What exactly are you doing? What do you, well, I'm a broker, So you really don't own real estate. You're just a player in the real estate industry. But yes, but it is important that we get to understand, because some people, all you're able to do for starters is to buy a land in Mowe. And when people are talking about real estate, you say, no, me, I'm not in real estate. But you already bought a land. Okay, you see, you already bought a land. Some of us, you already built, a small shop, a small structure. Some of us have even bought farmland. It is yours. Even though that may fall under agriculture, but the fact that you own that piece of land shows that you are in the real estate industry. Next slide, please. Okay, so I already defined real estate. There are 8 things I quickly want to touch on very quickly in terms of characteristics, in terms of things you need to know. So out of the asset classes that I already showed you as part of my earlier slide, real estate is about the only asset class that is a space-time product. So it has the ability to generate income over time in exchange for the use of space. So that's what we call the space-time uniqueness that other asset classes do not have. Okay, so in exchange for using your space, people pay you money over time. They pay per annum, they pay every 5 years. You lease out maybe a land or a property, and they pay you. So when you buy mutual funds, when you buy stocks, when you buy all of those other things, those ones do not have this space-time uniqueness. So this is one of the things that characterize that differentiates, or let me say distinguishes real estate from other asset classes, the space-time product. Next slide, please. Okay, number 3 thing that I would want you to know is the types of real estate you should know about. Okay, you have residential, you buy a land, you build on it, or you buy a house and then you start to live in it. Okay, new construction, new homes, old homes that you buy and you just renovate. Those are residential real estate. Commercial real estate, of course, includes shopping centers, malls, and all of that. Industrial real estate, talking about manufacturing, buildings, property, as well as warehousing. And of course, you have land, my dear land. Land. Land includes vacant land, working farms. I already said that. Some of us are invested in farmlands. And you're like, well, they are talking about real estate. I'm not into real estate. As long as you have the title, you have a landed property that is being used, not a property now. You have a land, a farmland, that is real estate, going by, the definition I gave above. So let's unbundle it. Don't feel intimidated when people are saying, oh, this person has a land in Ikoyi, this person has a land in Banana Island, or a property. The truth of the matter is, as long as you have paid your money to acquire a piece of property, yes, I know life is in phases, men are in sizes, you qualify, okay? You qualify to be called an owner or a developer or whatever the case, a player in the real estate industry. Next slide, please. Let me quickly talk. Remember, I'm talking about 8 things, and this is the third. Let me talk about some characteristics I would like for you to know. Now, there's the real estate market and there are real estate investments. There are key players in the real estate market. I'm just going to get to that in a bit and show you some of those things. But what are some of the characteristics of the real estate market in comparison with other asset classes? And I was deliberate starting this class with, showing you other asset classes because I wanted to kind of show you the distinction that real estate has, from these other classes. Now, the real estate market is a highly layered local market, okay? Heterogeneous products. It is mostly private transactions. You would agree with me that a lot of things happen in real estate that it is, I'm not saying there are no regulations. There are regulations, of course. There are documents, there are legal things that you do, but it is not as strict as when you buy mutual funds. No, when you buy mutual funds, they will tell you, buy stocks, they will tell you this and this, or NSE, CSCS, they are monitoring when you buy. Instantly, you get an alert that you have bought some shares. When you sell, you get an alert that some of your shares have been sold. But those are quite regulated. But in my opinion, real estate is kind of, how do I put it now? Anybody can go into real estate. You can wake up today to say, I want to buy a land, I want to buy a property. And apart from you trying to do verification of the documents, it's easily, most times, culminated. I mean, the transactions, the purchase, the sales are usually done easily without a lot of external interference or regulations, okay? So another characteristics is that there are sophisticated and unsophisticated investors. You have people who buy real estate in, the range of billions. And you have people who still buy land at 250. At my level, you're buying 250, paying 250 every quarter. You're seeing people who are buying houses, in the range of 500 million. And you're seeing people who are buying farmland for 200,000 somewhere in Oyo State. So you have different kind of players, and then sometimes it could be unorganized and free for all markets. Now, go back to my slide, please, and let's talk about real estate investments. Now, why should you buy real estate? Let's talk about it. Well, what are some of the things that you should consider in terms of pros and cons? Heterogeneity again, okay, durability. You buy a real estate product. If you buy a land, you buy a house, and you're good with all your documentation and due diligence, it's there for you, okay? It is there for you for a long time. Sometimes some real estate investment, if you don't get it well, there's a bit of lack of transparency. Sometimes high startup costs, sometimes highly illiquid. You have a property on the market you want to sell, unlike stocks and shares that you can easily sell immediately. Sometimes it might be a bit difficult of setting or, selling your real estate. Now, I am not saying this to say real estate is not good. I'm just trying to show you the characteristics of the real estate market. And then, of course, there are vulnerabilities and risks. Okay, having said that, the fifth point I would like you to know, next slide, is just a few ways you can make money in the real estate market. Next slide. Number one, capital appreciation. Do I need to say that? I'm sure a couple of us are watching this. You have bought a land at some point and then you are reselling. I was having a discussion with a friend of mine yesterday, and I'm still going to go into the gist of this. About, say, 13 or 14 years ago, a friend of mine told me, there was this land they were selling somewhere, blah, blah, blah. And it looked interesting. Young ladies, we were married, and so much energy, so much, vitality and vigor. And then, without doing any due diligence, we bought the land. And then, of course, the only thing we got was receipts. We never bothered to ask about, the documentation and all of that. And then, after about 1 or 2 years, we realized that it was a bit difficult getting a hold on the person who sold the land to us. And anyway, why am I citing this example? So I was talking with my friend. I think we bought a plot back then for 250,000. That area has become so developed. Now, my friend was telling me that a plot of land in that area now goes for about maybe 5 or 7 million. So look at it, from 250,000. Well, let me mention that we never got our land and we never saw the person again. And unfortunately, the person was our go-between pastor. So it was one of those, cases and issues of investment gone wrong. But that has not deterred us from buying land thereafter. So the ways you can make money in the real estate market. So imagine if, I paid 250 for that property and everything went well. By now, if I hadn't sold it, I would be selling it for about 7 million. Now, you do the calculation. Okay, number two, cash flow income. You buy a property, you resell. No, you buy a property, you rent it out, or you build a property, you rent it out. You have cash flow income. Now, I have a first-hand example of how real estate could come to the rescue and help you generate cash flow. Now, one of my clients and mentors, somebody I reverse so much. I've worked with him back and forth for close to 2 decades. And this year of COVID, in which, a lot of people have complained about, stuff not working, cash flow businesses are failing, his real estate investments, his real estate properties are what he has been comfortably, and I said that word again, comfortably cashing in from. Now, he had one of his properties gives him about 140 million per annum. Now, he was fortunate to have leased it out to, quite a big reputable firm. And, so this is not essay because I manage some of those things in his portfolio. Now, imagine how much of the expenses would you have, or how much of money would you need that 140 million hitting your account from one property would not cater for? Tell me. Okay, so that's an example of how you can earn rental income. Now, I hear somebody saying, 140 million, when am I going to get that? There. I'm going to show you something. See, it's about mindset. Playing in the real estate industry is like doing any other thing in life. You starting small. Like Dave Ramsey says, personal financial success or personal finance is a marathon and not a sprint. because we are so used to doing things the way of, oh, okay, let's quickly get the money. We want to make quick money. That's why we end up getting fatigued along the line. That's why we get, a bit discouraged when things don't go our way. But when you have a long-term approach to investing, to personal finance, to any area of your life, trust me, it works like magic. The universe would connive with you and support you. And over time, you would reap the dividend. So cash flow income, of course, another way to make money in the real estate industry is related income, real estate related income such as commissions. Now, I'm still going to get to a slide where I would show you the players in the real estate industry. But for some people, they do not have properties, but they earn, they sell. I have a friend who is a real estate agent. All she does is to broker deals. She introduces the buyers to the seller. She has learned the trade. So she's not necessarily earning cash flow, enjoying capital appreciation, but she brokers some deals. Sometimes she gets at 5%, she gets at 10%, and she's fine. Okay, so some of you may not have the capacity to build or to buy a land right now, but if you are bent on playing in the real estate industry, you can earn through rental income, through commissions, and all of that. And of course, the other area, the other way by which you can earn from the real estate industry is ancillary services. For example, now those who build houses, they have loads and loads of people who supply materials. Do you see? So what we are talking about real estate, which has to do with land and property. Let us not limit or restrict ourselves to, only those who are buying or only those who have the money. You can play in the real estate industry and work your muscles, work the real estate muscles until you're able to buy your own property. So I consult for a construction and real estate firm, and I've done that for about 15 years now. And I know the huge and big projects that we have done. We work with vendors that supply sand, that supply iron, that supply metals, that supply granite, that supply a whole lot. They're making money. Now, you cannot tell me that they are not enjoying or reaping the benefits from the real estate industry. For somebody listening to this, again, that's why I said let's unbundle real estate. Let's not limit our thoughts about real estate to only those who have money to buy, to develop. Okay, you can start from ancillary services, small businesses with the real estate dealers. You're supplying stuff, or you are brokering, you are earning commission, and then you can build your own house, and then you can enjoy capital appreciation. My next slide, please. Now, why should you go into real estate investments? Next slide. Already I told you that, see, real estate is just one asset class type, and there are others. But should I tell you something that I stumbled on as I was preparing for this presentation? In Nigeria, I can't remember the year exactly, statistics showed that the real estate market in Nigeria is about 59 trillion naira. Real estate. And listen to this. Whilst the stock market is about 12 trillion naira only. So real estate is about ×5 of the equity market. All of those big amounts that they mention when you're watching the news, when people are saying, oh, the stock market is low, the stock market is high, the stock market is bullish, the stock market is bearish. Real estate does about ×5, ×6. Okay, so let's do the maths. ×6, actually, 12 trillion to 59 trillion. So you see that it is really, 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 really big an industry. And everybody, I tell you, everybody should be a player in that industry. Now, quickly, I'm going to run through this very quick because I still have quite a number of slides. Why should you be why should you play in the real estate industry? Why should you invest in the real estate industry? For self-use and occupancy, ownership and control, yes, you can display the slide. Cash flow from returns, preservation of assets. These things should motivate you, to have a say or to have a stake in the real estate industry and to consider real estate investment. Portfolio diversification. Don't just have shares, agriculture. Start with a little of real estate so your portfolio is widely diversified. security or capital leverage, collateral for credit, capital gains tax, capital appreciation, high operating yield. Those are some of the reasons you should go into real estate. The next one. Now, let's quickly talk, because we could talk about some of the advantages of real estate. But trust me, just like every other asset class and just like everything, every other thing, there are disadvantages and risks. One of the disadvantages and risks is the illiquidity of real estate. I already mentioned that earlier on. Sometimes you have you have invested in real estate, you have your property sitting in the market for months, and you need the money serious quickly for something. So sometimes real estates are quite, I call them the frozen assets. There are three categories of assets. You have the liquid, you have the frozen, and you have the vapor assets. Now, there's no time to go into that, but real estate is kind of frozen because you have to unbundle, you have to toy it, you have to sell it, and it is not as liquid as mutual funds and the other ones. Sometimes, because real estate entails a lot of go between, if you're a landlord, you have tenants, you don't have time, you have an agent who is monitoring it for you. Sometimes improper management could be your undoing. Intrusion sometimes and lack of proper documentation. Almost everybody sometimes would have a story about Omonile, and like the story, like the example I already gave you. I bought the land, and I mean, what has happened? Okay, governmental policies sometimes, government acquisition issues, market and economic cycles. In the Western world, sometimes there are times. Example, I think it was the 2008 economic recession in America that was widely, known and all of that. Real estate crashed, so sometimes there are cycles within the economy and just around the world that impacts real estate, and then legal issues. My next slide, please. Now, at this point, I need to start running. Now, let's quickly talk about the key players. Now, the reason I'm taking you through all of this is to kind of give you a wide set of information, kind of, about real estate, things that should motivate you, things that should inspire you to want to even consider real estate, irrespective of your financial position and all of that. So key players, you have the owners, the people who own the land. You have the builders and developers. And the reason that I differentiated the owner from the developer is that sometimes some people do not own the land, but they are willing to go into joint venture with people who own the land so that they can build and develop. You have consultants, you have financial institutions and the lenders, you have equity investors, people like you have money, you want to put it in a real estate project so that you can earn your money later. You have joint venturers. I mean, over the years, I have worked with people, who have gone into joint venture projects to do amazing projects and real estate projects. And of course, you have the general agents. But basically, these are the 8 key players. Now, the question is, where do you see yourself playing right now? Yes, even though you don't have a property, where can you fit in any of this? Maybe as an agent, and like I said earlier on, like an ancillary service provider and all of that. My next slide. Now, I have talked about real estate, the general things. Now, let's talk about the do's. Please, I need my slides to move faster at this point. Now, the do's. Remember, my topic is real estate, the do's, the don'ts, and the strategy. And I would, spend a bit of time here on this one. Yeah, go back to you must start. Please go back to that slide. It is very important. For years, I worked with construction experts. I worked with architects and all of that. But I had this mind block that because I was an accountant, real estate should not really interest me as much. I worked on projects that ran into billions and billions and billions of naira. Okay. And I mean, I just kept doing all of the accounts. But on a personal note, it never occurred to me that it was something I could embrace for myself. I am encouraging you today. There are different mental blocks and conditioning and mindset that might hinder you from playing in the real estate industry. I already said it. Some people might say, no, but I don't have so much money. But I'm actually a student. Can I begin to consider real estate? Yes. At any level, as long as you are knowledgeable. I like to talk about Warren Buffett a lot. Warren Buffett started business at 9. he started to sell stuff. I think at 11, he bought his first set of shares. At 14, the man is 90, he clocked 90 last month. Yes, was it August? Yeah, I think it was August. I can't remember the particular day. Now, I think it was August 30th or 31st. He bought about 40 or 50 acres of land, farmland, when he was 14. So nobody has an excuse. As soon as you are knowledgeable and you can decipher between evil and good, you are good to go on real estate. You must be willing to start. You must have a mindset that, you know what, I am in for this. So if Warren Buffett could buy acres of land, 50 acres, actually 40 or 50 now, at 14, look at him, he's still waxing stronger and stronger in the world of investment. And they call him the Oracle of Omaha. Okay, you can be the oracle of your own space. Okay, so have a mindset of starting already. Here are 7 things to bear in mind. Next slide. Number 1, I already talked about having the right mindset. And this, this cuts across all asset classes. Now, this cuts across whatever you want to do in life. More often than not, we are limited by our subconscious mind. And sometimes by our conscious mind, we are limited by what we see. We are intimidated. We are exasperated by figures. We are like, I can't do this. So they're talking about stocks. They're talking about real estate. I mean, for a long time, I thought real estate, when they, people that say, what do you do? Oh, I do real estate. You're like, hey, billionaire. No, let's unbundle it. Let's demystify it. You can start real estate anytime. Even when you lease a land to farm, you're playing in the industry already. Okay? So mindset, have a right mindset that, yes, I can play in this game and I'm qualified. Number 2, have a strategy. Have an overall investment philosophy and a long-term plan. Very critical. Within my investment club, we talk about how you can, diversify your portfolio. Asset classes. Sometimes when an asset class is not doing well, in Nigeria, fixed income securities since the beginning of the year, like treasury bills, have not been doing well. You get it? Mutual funds. 2 years ago, 3 years ago, mutual fund at some point was returning 18%. Right now, fixed income back then was returning 16%. Right now, what are they returning? Fixed income will probably give you 1%. Mutual funds maybe like 3%. In times like this, having a properly diversified portfolio and including things like real estate is what will keep your, portfolio breathing and breathing well. Okay, that's number 2. Number 3, have a money team. This is very important. And this is something I have practiced and I continue to practice and I continue to teach people. At whatever level of your financial achievements, even if you're a student, even if you have just passed out of NYC, you must have a money team. You might not be able to pay them, but there are people who influence what you think about money, how you think about investments and all of that. Who should be in your money team? A lawyer, a real estate expert, a banker, of course, you yourself, and key professionals, especially in the area of the asset classes that you have or you wish to have. It is important. Have a money team so that they can advise you. Sometimes we get so excited by, they tell you there's a land here, there's an investment here, and then you're rushing into it. You're not asking the right questions. You're not saying, okay, what are the title documents? Does this have a C of O? Does this have a deed of assignment? Who owns it? Is there an acquisition on this property? You don't know. But just because they say, this land is good, everybody is buying, you go into it. These are things you need to buy, put in place. You need to analyze the risks and the returns. I'm having to rush through my slides now. You need to consider your decisions, due diligence. That's a word you cannot afford to play with in the world of real estate. You have to do your due diligence. You have to evaluate your real estate options, the real estate option, the information you have before you have to evaluate some of those things. And then the investment, purchase, lease, transactions have to be properly consolidated so you don't get your fingers burnt. Remember the example I gave? And I think I've had another, story that touches the earth example as well. But I mean, that was then. Now we know better. We know that we need to put in a lot of effort. Questions to ask, okay, before you invest in any real estate investment opportunity. Next slide, please. Location. Where is it at? Cost. What is the cost? Some of us buy real estate properties or investments that we do not physically visit. Come on, how do you do that? Sometimes also, even if you're not buying, just see, feed your eyes, feed your mind, feed your fantasies. Okay, build your muscles, work the muscles. Okay, don't buy any property, any landed property, any real estate investment property or project without physically visiting. What is the cost? What is the time horizon? Why am I buying this? And I'll show you in another slide some of the various reasons why people buy. What is the cash flow like? Am I buying to sell? Am I buying for my personal house? Okay. What is the costing? What are the lending rates? Do I need to get a mortgage? Do I need to get a loan? Is this a new property? Is it land or is it a property? Is it new or old? What is the real estate market like generally? We must not just be on social media tweeting answers, which is fine. You must also educate yourself and get the necessary knowledge. Okay, the next slide, I am going to have to skip on this because of time. Please take me to the slide after the next slide. If I have time, I will come back to this, okay? The next slide, which is D, talks about something that I call the SGAR factor. Before you invest in real estate or any form of investment, these 4 things must be very, very paramount to you. What is your current financial situation? Okay, before you put money into anything. And that's why a lot of people get their fingers burned. You are following people who have much more money, who have done a bit more investment, and then they come to you and say, there's this investment, let's quickly do it. The MMA types of investment, you put your money in it. If you're earning 50,000, it's a phase, it's a season. You will earn more at some point. You cannot start to say, I want to buy a property of 20 million when what you earn as at this time and phase of your life is 50,000. So consider your finances. Again, your salary should not go into investment alone. That's where budgeting, and I believe the earlier speaker must have spoken about financial things, considerations you need to do or put in place before you invest. A lot of people, because they hear about an investment, they so much put themselves under pressure. You have to take care of your necessities, your needs to have, your nice to have, do a budget and all of those. And then, yes, a certain percentage goes into real estate. That percentage that goes into real estate is what you would base, your real estate or your investment plans on. Okay. So S, your financial situation. G, your goals. Our goals differ. My first son is 12, meaning in another couple of years, he's going to be in the uni. Okay. So if we want him to school overseas or wherever, we have to consider some of those things now, not then. Now, I cannot, be having the same type of investment goals with somebody who is in her 20s, who doesn't have responsibilities already. Now, that person is doing high-risk investment. I'm saying, oh, yeah, let's do high-risk investment. When I know I have certain goals ahead. Now, somebody who is nearing retirement cannot do some of the investments I am doing because, again, you have such a short period of time, and some are even in retirement already. You have to guard your money jealously so that you don't lose it. You can't play in the stock market like some of us will play in the stock market. Okay, your goals, your age. I already mentioned that. You must consider your own age and determine the kind of asset classes that are suitable and how your portfolio is built. And of course, the risk temperament. Some people are conservative, some people are moderate, some people are very aggressive. These are things you need to consider before you invest and whether in real estate. Quickly, let's talk about the don'ts and I go into the strategies. 7 things you should not do when it comes to real estate investment. Can I have the slides up? Quickly, I'm just going to run through it. Not having a plan. Do not go into real estate without having a plan. Why am I buying this property? For what reason? Am I buying to hold? Do I want to live in it? Do I want to sell? After how long? Lack of expert advice. Don't buy real estate without getting expert advice. Not having a money team, not having people that can advise you. In any investment, whatever you're doing, you need particular experts for particular field, real estate is a different world entirely. You can't have a friend who is a banker advising you on real estate. Okay, the next thing, lack of due diligence and research, overpaying. Sometimes some properties are too way priced above their actual value. When you just shop around, some other times you realize that you can get some property in the same range for an amount. I remember, a while ago we're negotiating for a property, and the agent kept telling us, yes, no, that's the last price. By the time we met with the owners of the property, we were able to get about 5 million discount. Okay, so you must be able to negotiate as well, and then not using trusted hands and incorrect costing overview. My final set of slides, I've talked about the do's, I've talked about the don'ts. Let's talk about the strategies. Number one, you must have an investment purpose. Next slide. 4 things when you're doing real estate. You will do real estate for 4 different things. You might buy for self-use. Some people just want to buy a house so that I can live in it. I don't want to pay my landlord again. I want to enjoy value appreciation. I want to self-utilize for myself. Some people buy for lease. So they buy and then they lease out. They start to enjoy regular income, value appreciation as well. But again, they start to also pay money repairing. Some people buy and sell short term. That's what you call flip. You can buy, flip, and that happens a lot. I mean, overseas now in America, there are properties that you can buy and flip, foreclosures, buy, flip, turn it around, make money, move on to the next. So some people buy and sell long term. Some people buy and sell short term. So what is your own investment purpose? Even if you can't afford it now, those are some of the things you need to consider as time goes on. Number 2, be aware of other real estate indirect investment options. Again, demystifying real estate. Real estate is not just about I buy a house and yes, the house is there, I'm seeing it. Some other times you can go into real estate without owning a physical property like that. There are real estate investment trusts. It's very popular abroad, where you all put money together. And I think some firms are doing it in Nigeria as well. And they do the real estate. So all you give them is the money, and then they invest on your behalf and they pay you your returns. There are real estate stocks. There are real estate mutual funds, actually, overseas. There are funds in the US that are real estate. I mean, even in Nigeria, there's a bank. I don't want to mention names. I'm not doing free adverts for anybody, but I am invested in some funds overseas. And even though I'm not invested in real estate funds, but I see a lot of real estate funds UK, real estate funds US. And the good thing is with $200, you can start some of these funds, okay? And then there are real estate sector-focused mutual funds and ETFs, what you call exchange-traded funds. There's no time to go into that, but they're like mutual funds. Some banks do it, where minimum of 5,000 naira, you can buy, it's open-ended, you can add to it, and they tell you this fund, we are using it for real estate. And again, already, like I said, there are real estate funds and bonds. Now, how do you start? As I wrap up my presentation, I want to start. So you have said, okay, real estate does not necessarily entail having a property, but I want to start. How do you start? Go on to my next slide, please. Number 1, get your finances together. Again, you need to consider your financial situation. You can't say you want to invest when you have not taken care of basic things. At the end of the month, you are not able to add and, just get your finances together. No, you shouldn't be investing yet, because you must be able to plan your finances on a short, mid, and long-term basis. Get your finances together, have a long-term plan, consider the kind of asset classes you want, get information, and then start saving. Yes, even though I said you can start real estate at any point in time, but these things are very critical. And if you can see that image, pretty much the same thing. Start small. Don't wait till, some people will say, when I earn 200,000 per month, then I'll be able to save 20K, towards my savings and investment. No. If you're earning 20,000 and you're not able to put 2,000 per month, which is 10% or sometimes 4,000 aside for savings and investment, then when you earn bigger, you can get that money. Okay, I am wrapping up now. The final slide, or my final teaching slide, number D, how do you start? Strategy, the power of many. Now, and I could spend my last 2 minutes on this one. this is an age of collaboration. And this is evidenced by what we see happening in Nigeria right now. See how youths, everybody, adults, Muslims, Christians, how we have all put forces together to demand what is right from our government. The power of many. And that is what this year has also taught us. The power of collaboration. There's that saying, African proverb, if you want to go fast, you go alone. But if you want to go far, go together. Real estate can be demystified when you have groups of people within which you can decide to do amazing things together. I remember there was a property we wanted to buy. Was it this year or last year? I can't even remember now. COVID has, changed the dynamics of many things. It was 200 million. How would I have been able to say, okay, I have 200 million, I'm putting into something? But within the club, we put the money together. Some bought 1/10. Some bought full. Some bought half. The joy of it is that, everybody at their level, some with just 250K, whilst each plot was going for 20 million, they bought into it. 1/8, 1/16. That's the beauty of the power of many. Now, some of us, we need to find ourselves within circles, within people that can help us, achieve our goals. I was at a program 2 days ago and I was telling them, when I was growing up, my mom used to have this club. They call them Egbe. They go to parties together. They wear ashebi. They do all of those things. One thing they failed to do was to financially invest or do things together. If they were saving as far back as then, 2K, 3K per month, trust me, they won't be struggling financially. Okay? So the power of many. If you want to go fast, go alone. If you want to go far, go together. This is an age of collaboration. Now, you can collaborate with your friends at a level, farmland. You're buying I know the organizers of this program sell real estate. And they're saying there's a real estate somewhere, you have done your due diligence, 1 million. Call 4 friends together. I bought a property, not a property, a land some years back. And it was, good money and all of that. Literally before my very eyes, it is appreciated. Okay, the power of me. So sometimes, and I think 4 friends. Yes, we're 4. We bought it, fenced it round. Even though we are not going to live there, but hey, we could just say one of us sold off one of our own plots, and it was good money. The power of doing things together. Okay, so as we wrap up, please go to my next slide. Again, I am an investment coach. Sorry, I run the Smart Investment Club, a community of people. We invest in diverse asset classes. Right now, we're in about 17 countries, about 400 members. We do all sorts together. The power of many. The power of many. You can check us out, thesmartinvestmentclub.com. Go to my next slide. Books, courses. I'm an author of 8 books as we speak. 1 or 2 books that should interest you right now. 40 Frugal Rules for a Journey to Financial Freedom. Please, can you go to my next slide? And the Fit to Fly Financial Plan. I published that earlier this year, and it's an amazing book that should help you, accomplish your goals. Okay, so Fit to Fly Financial Plan and 40 Frugal Rules. The Fit to Fly is a course and has a book as well, and the 40 Frugal Rules are books that you can use. And then please, you can reach me if you want to reach me. You can leave that as a final slide on Twitter, LinkedIn, email, website, and just wherever. I would be more than glad to shed more light on some of the things that are shared. So today we have talked about real estate on a general note. We have talked about the do's, we have talked about the don'ts, and we have talked about the strategies. I hope with these few words of mine, I have inspired you a bit to start to consider, investing in real estate. Thank you for having me, and God bless.
Wow, thank you very much. We've had a wonderful evening. Thank you very much. I mean, the whole social media is on fire, is ablaze right now. People appreciate you. A lot of word of encouragement coming. Appreciation rather coming from every corner, both on YouTube and on Facebook right now. That it was an awesome section. We gained a lot. Thank you very much. Thank you so much. Thank you so much. Can you still hear me, ma?
I can hear you. Yes, thank you.
Okay,
Thank you. I can hear you.
So we are going to be taking questions. Wow, thank you very much. We are going to be taking questions. If you can take one or two questions. So the back end team, please, can you just bring up questions in case we have any questions for her? We'll only be taking one or two questions. We'll only be taking one or two questions because of our time, so that we can have our third speaker for tonight. So questions. Okay, while we wait for the media team to put up a question, there's someone asking a question here on YouTube directly. So I'm going to read the question from YouTube directly. And the question is, how can you advise on getting genuine property developer on property building and joint venture transaction in prime tertiary institution in Nigeria? I don't know whether you get that question, ma'am.
That question is loaded. We have to unbundle.
So I think the person is.
Go ahead. Yes.
Okay, ma'am.
Okay, so please read the question.
Okay,
again,
so the person is asking. Okay, the person is asking, how can one identify a genuine property developer in prime tertiary institution? I believe the person wants to go into maybe hostel building or stuff like that, in a place that is very, very close to an hostel. So it's asking, how can one identify a very genuine property developer?
All right,
so what
thank
are the
you.
factors, or what are the key things that people need to look at?
Good question. The internet is your friend, trust me. I mean, there are loads and loads of information that you can get on the internet. I am aware that there are groups, there are societies, there are institutions, there are regulatory bodies. I know that you have the National Institute of Surveyors. I know that you have real estate practitioners. Please Google to find out the exact bodies that, kind of regulate real estate. The information is there. The good thing about this generation and what social media has done for us is that you can get reviews. Communities such as Nairaland and all of that, if you type out some of these things, they will bring it out. Real, genuine real estate players in Nigeria, they will bring them out. Okay, so that is number one. Number two, one thing you must also consider when it comes to real estate investment is documentation. I could go on, but there is no time. The kind of documentation that you need to ask for, that you need to see, that you need to be aware of, that's another ball game entirely. Okay, so pretty much internet, pretty much find information on the internet who are genuine developers that you can work with. Go on social media, the information is there, and when you do get them, make sure that you read up about them to see actual projects, because there are audio real estate companies as well. They tell you they are doing real estate, they're not doing anything. Some real estate players, builders, developers, so to say, they just get, what do you call them, influencers to do stuff for them, and they do not genuinely have all of those things. So I would refer you to the internet, okay? Get information, read up reviews, and I hope that answers the question. Some other times also, depending on the amount of money you have, there are loads of genuine real estate people who want to do joint ventures. You put down the land, they build for you. I have shared and I have facilitated quite a number of such projects. I do the project accounting and all of that. We do all of the feasibility studies, and so some people they put out the land, real estate developers build on it, and then they give them maybe 2 or 3 units as their equity contribution, as a return of the equity, and the guys can sell, and then the real estate developer takes the remaining whatever. So I mean, there are different ways to go about it, but please, you cannot alienate due diligence from real estate. It is very, very important that you do get your necessary information, have social proof, demand to see their social proof. What have you done? Who have you worked with? What are projects that you have done? Can I see? And I hope that helps. I see somebody asking, what if you're not in Nigeria? How can you be physically there to see the property? Look at you. You're watching me from the US, from the UK, from Canada, or wherever. Get somebody that you can trust to go check the land. Let them do a video call with you whilst they are there. Okay? It's not that difficult. Okay? Distance is no longer a barrier in the world of investment. I have been to 2 or 3 properties in the last 1 month to check out stuff, to physically see things on behalf of my club members. Okay? And, so we did videos shared with those who are interested. So there's no audio anywhere. This is the land. These are the title documents. These are the things to know. That I hope that helps. Somebody says, how can one manage risk in real estate? I tell people in the world of finances, in the financial world, there are 4 types of risk: income risk, expense risk, asset risk, liability risk. Pretty much, I think all 4 risks apply to the real estate. Income risk, okay? You rent out the house and then something happens, the tenant is not able to pay you because COVID happened, or because there was violence, and then things happen. Those are risks that sometimes you do not necessarily have to have control over. But how do you mitigate against risk? Insurance. In Nigeria, a lot of people don't want to do insurance because they believe that insurance companies, permit me to say, are just, in quote, shopping their money. In the Western world, in my course, financial planning, Fit to Buy financial planning, I encourage you, to check out that course. It will revolutionize your thinking. We talked about the 7 elements of financial planning, and insurance is a full module on itself. In the Western world, they have loads and loads of insurance types: universal, life, premium, all sorts of insurance, variable insurance, variable life, so many types of insurance. So mitigate against income risk by insurance. Pretty much all the risks can be mitigated against by insurance. Okay. So expense risk is that you keep spending. Sometimes some things happen and then you keep spending on the property, especially if it's a property that you bought and then you have leased out. That the dynamics of that, I don't even want to go into that. Personally, in my own opinion, the sweetest type of real estate is buy, hold short term, flip, sell, or buy, hold long term. But leasing, renting, I'm not saying it's not good, but the dynamics sometimes, expense, you have tenants who are always spoiling stuff. You have to keep, those are expense risks. Now, asset risk, relatable or applicable to real estate, the real estate industry, or the real estate, market or investment, is loss of assets, fire sometimes. Even when you invest, some people will not do comprehensive, they just do some kind of real estate insurance that does not cover. And if fire happens, what happens? Sometimes it's a collapse, it's an infrastructural, what's the word now? Deficiency. And then there are risks. We don't pray for them, but these things, apply. And then another one is liability risk, especially if maybe you got a mortgage or you got a loan to build a house. Now, if anything happens and you're not able to pay back, what happens? They place a lien, they acquire your property, they forcefully collect it from you. That's a risk. All of these risks can be covered by insurance. Some of them, like they say in agriculture, the natural causes, the one that are caused by natural causes, to a large extent, you can use insurance also to mitigate against such risks. Sometimes professionalism. Some of us, we just want to build something really quick. You get people who are not necessarily qualified, and then they do a shabby work, and then there's the infrastructural deficiencies that you have to correct over and over again. So that basically those 4 risks can be mitigated. Number 1, by you can mitigate against them by insurance. You can do proper due diligence. You can do your get professionals to advise you so that you don't get your fingers burnt in the process. I hope that helps.
Thank you so much. Thank you so much. Fantastic delivery. I'm not surprised. I'm not disappointed. Thank you so much. Thank you.
Awesome.
Thank you. Thank you so much. I'm certainly going to connect with you again, maybe tomorrow or next, Thank you so much for the whole social media is on fire already, with all the fantastic session delivery. Thank you so much. Thank you so much.